This next 6 months, crypto very strong. I don't think it's a replay of 2019, which was a longer pullback while global central bank balance sheets shrank for a period of time. I think knowing what's going on in the world, where it's going, we will probably accelerate this. I think it looks more like 2016-15 cycle, which was a big spurt up, which I think we're still in the middle of, then a long sideways correction for 5 months or whatever, and then another explosion higher as you really start to see the central banks kick in. So I'm very, very positive. Crypto, but more importantly, a lot of money went in VC into the space, and there was a lot of people building product. So the next phase of what adoption looks like will come. And I don't know what it is. Could come from anywhere. Could come from gaming, could come from digital ID, could come from brands in the NFT and Web3 space, could come from DeFi, I don't know, but it's coming. So I think that's very interesting. So I'm very bullish on crypto overall.
Hello and welcome to Crypto Street. In today's video, Raoul updates about Bitcoin's current market standing and his outlook for Bitcoin in the next 6 months.
The dollar was so big because the US was the largest part of global GDP, and it was the most stable part. Now, as the US has become a smaller part of global GDP, it's more problematic because the global system is now reliant on dollars. So we've got this gigantic euro-dollar market. There's a global shortage of dollars that's ongoing because the US doesn't supply as much dollars into the system anymore because it's not as large a part. That's part of this unstabilizing effect that we've had. But the dollar is, 87% of all world trade and maybe 50 or 70% of all world debts. So there's no way you can walk away. China can't walk away from the dollar without entirely nuking its own country. Nobody can. So it has to be a slow, ongoing process because there's too much debt in dollars and everybody needs it for trade. So if you go to this world that you see people talking about on Twitter, it's like, well, they're going to walk away from the dollar. Great. You've got the dollar debt and you've now got yuan or rupee income. Well, that's the recipe for a disaster. What most people have got is dollar debts and dollar income. If you're an oil producer, you can have dollar debts and you can have dollar income. It's the mismatch creates all sorts of problems. So I don't think this can happen quickly. And I don't know the answer to it. But that's why I'm not a believer in the dollar's going to collapse. Interesting enough, there's a very high correlation, lagged by 18 months, of the price of the dollar and QE. So the dollar rises in line with quantitative easing, but with an 18-month lag.
Entrepreneur Balaji Srinivasan explained the rationale for his bet that Bitcoin, BTC, could reach $1 million in price by June 17th, as he spoke remotely by video link at CoinDesk's Consensus 2023 conference. Srinivasan, a former chief technology officer of crypto exchange Coinbase, is credited by many for predicting the effects of COVID-19 earlier than most. In March, he predicted stupendously bullish prospects for Bitcoin in response to the devaluing of the US dollar. He said the price could reach $1 million in 90 days after March 17th. Could it be that it takes 900 days or even 90 months? It's possible. I don't have a 100% probability of it, Srinivasan said on Friday. I may be wrong, but I'm burning $1 million to tell you they're printing trillions. He described his prediction as a symbol of the collapse in full faith and credit in the U.S. financial system because of a proliferation of money printing by the government to prop up a fragile banking system.
So going back to 2008, the big thing that changed was we lost trust. We lost trust in the system. People lost trust in the American dream or the European dream. They lost trust in banks. They lost trust in intermediaries. They've lost trust in media. They've lost trust. Foreign governments have lost trust. So nobody has trust. So, well, crypto is a trust-based system, which is interesting. But what it means that, okay, if you don't trust anybody, you need something that helps you. That traditionally was played by gold. I don't trust your money. You don't trust my money. I don't trust that you're going to do this. So I'm going to keep gold. But gold was also seizable. So crypto played a role in all of this, and it plays it at many levels. It's clearly not a system of money yet because it's too volatile. It's impossible to try and deal with daily transactions for bread in a Bitcoin price that goes up and down, up 700% and down 70%. That's the way to destroy an economy, volatile money. But in terms of long-term overall savings, because it offsets the debasement of currency, which is driven by the debt and the demographics and everything else, it works very well indeed, in fact, better than anything else. And because we've got this ongoing adoption of the technology. So when you go to, firstly, who is the biggest players in the world that are potentially moving into this market, and I think you and I have even talked about this in the past, is the sovereign wealth funds. They have an infinite time horizon, and what they need is independence over all things. Now, most of them have an enormous amount of US treasuries, which they will do because they have dollar debts, dollar economy, everything else. So it's not like we're just going to sell all our treasuries, but they need other things. Now, they've been buying gold at record pace, obviously, because if the US seizes or renders useless the Russian reserves in US treasuries, then why would anybody want to hold US treasuries over an extended period of time? You'd have to be friends of the US or you risk it. So I see a role, and that's, I think, one of the reasons why the Middle East is becoming very active participants in the market overall. And I think for individuals, because of the lack of trust, it's one thing we can trust because it's not driven by government. All the government's going to do is try and regulate it, but they can't get rid of it. And it actually empowers people to think that you're fighting the government when it comes to regulation. I mean, just look at Twitter. People love an enemy, and Gary Gensler is like enemy number one because he represents the old system, the system that let us all down. And he's kind of saying, look, we're there to protect you. And everyone's going, fuck you, you never protected us in the first place. We'd rather take our own risks with our own money, which is the agency thing that you talked about. So I think that trend is unstoppable. But then obviously the layer of Web3 that lays on top of it, how can you use this technology in other new and unique ways, is the driver that turns it into a Metcalfe's law adoption model, because you're building systems on top of a network itself. So it kind of becomes self-reinforcing. The other really, really big thing, and people don't really understand it yet, is Ethereum having a yield and a liquid yield out to 12 months. It means you've got a money market curve for the internet. And that gives you a value of money, gives you an ability to price risk. What is a yield on a CeFi platform, risk adjusted versus ETH pure staking? It's very interesting because you're creating, I think ETH is actually almost a complete global digital economy right now, which is very interesting to me. I'm going to be writing a piece on this as well about how in front of our eyes, we've actually built a whole new economy. I haven't really realized it. We kind of see bits of it. My forecast since about March of last year, using my forward-looking indicators, was that the economy bottoms March, April, May. So that would be an ISM survey of hitting about, let's say, 40, which means roughly translated negative 2% GDP. So no great disastrous recession, but it always exposes something, which is the banking system this time around. Now, the market forward saw all of this and it started rallying. Crypto's the most furthest advanced. The outcome of a recession is more cowbell, as I like to say, and the more cowbell is more stimulus. More stimulus means that we've also got an election year, so the probabilities are even higher, and then there's fiscal. So we've probably got a lot of stimulus to come. So 6 months forward, the economy will have troughed. Whether we've got positive GDP growth or not clear, but it'll be on its way back to recovery. But the recovery is going to be slow because these jobs are not coming back. We've got commercial real estate overhang. But the markets are likely to be very strong because of stimulus, which is the key driver, plus the technology adoptions that are going to be everywhere. So the macro for me is, the worst was behind us. I think October was the low of the markets. I've been positive ever since. And I'm super bullish technology, crypto. Those are the two big things, and bullish endlessly in perpetuity, but really for this cycle, which ends in some time. Remember that ISM cycle that comes every 3.5 years? It would come and give us problems sometime back end of 2025, which is like the same as the Bitcoin halving cycle. It's all the same shit, right?
So, what are your thoughts about Raoul Pal's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.